All right. Hello, everybody. Welcome back to the channel. We are here on another episode of Sunday Futures. Hopefully, everyone is doing well. We've got a lot of stuff to run through and a lot of different headlines that I want to talk about in terms of the implications that it could have potentially on the markets going into next year, which is a couple days away. And that's also kind of crazy. Got a new audio setup. Let me know if the mic is okay. The reason the mic's not attached to the stand yet is because I didn't fully attach it to the stand, but I also bought a stand with it. But should be a new audio setup. If it's too loud, I can adjust it. If it's too low, I can adjust it. So overall audio should be a lot better from last week's audio or the last couple weeks of audio. And if any issues, then let me know as well. Gene says it sounds heavenly. Okay, perfect. Audio's crisp. Good. Perfect. Love it. That was good. That was a quick fix. So audio should be good going into next year. Okay. First of all, thank you everybody for being here. Hopefully everyone had a good weekend and they got to spend some time with their family and friends. I know a lot of you guys are still on, I guess, break, vacation, you could call it that, for people that aren't working in the last week of December. We have 2 more days left of December, tomorrow and then Tuesday. And Wednesday, we are in 2025, and Thursday is the first day of trading for 2025. So it is pretty exciting to be here towards the end of the year. I think there's a lot of things that we have to discuss. We had the stock market awards. Thank you for everyone who showed up to that last night. And I thought that was a pretty fun show. We went through 14, 15 topics and talked about the different implications of where we think 2025 will go. A lot of different themes, stock picks, etc. Pretty much all of us are bullish, and I am bullish. But there are things that we definitely need to be concerned about in terms of evaluating where this market goes. And we'll be doing that every single day. So let's get started. Thank you everybody for being here today. We have 11 minutes until the Robinhood overnight markets open. And based on these overnight markets, we're going to get a better understanding of where the market wants to go. Futures are basically flat. They are slightly red. I mean, I don't even know if you want to call this red. These are pretty much flat. S&P's 0.0%. NASDAQ is slightly up a little bit. Small caps are down a little bit. And then the Dow Jones is down as well. By the way, did you guys see my nails? Got a manicure, bro. Look at these nails, bro. She used like some clearing paint or whatever you call it. She's like, you want me to like paint them clear? I was like, you can paint nails clear? That's a thing? I thought there was only one. So, dude, these nails are freaking elite, bro. These are elite. And I got the mani pedi, dude. It's like, it feels good. It's been a couple months since we it's not gay, bro. It's not gay. I said this to Steve. I was like, dude, it's just being hygienic with your nails. You know guys and their nails, bro. It's always filled with all this junk. Like sometimes a little mani-pedi. You know what I'm talking about? So yeah, we got that done as well. Anyway, futures are flat. The one thing that is red, and we'll start with this thing to begin the conversation for tonight, is the grinder jokes are amazing. I love it. Self-care isn't gay. Exactly. Self-care is not. It is self-care. It's a form of self-care. And it feels good, bro. Like the mani-pedi, it actually really feels good. Bitcoin. This freaking asset class is not participating in the Santa Claus rally with the rest of the market. Now, granted, it's up 3x this year, so it's hard to be that upset about it just because it's not at 100, it's at 93. But it hasn't done the best. And because it hasn't done the best, especially it hasn't done the best over the past couple of weeks, the proxies have been hurt. The biggest proxy right here, MicroStrategy, down another 3% last week, ended at 330. At one point, it was at $300 in the pre-markets on December 20th, which we'll talk about that 12/20 timeline because I think there's still a lot of implications from last week. But in general, Bitcoin is struggling right now. And I'm going to go through some stats to kind of prove that Bitcoin is struggling. Realistically, if you just look at the ETF inflows and outflows, you can see that they are not as strong as they were from November 27th to December 18th. And as a result of that, the proxies, I think, are going to take a hit. When Robinhood opens up at 8 p.m. in the overnight trading, I do think Coinbase, Hood, Marathon, and MicroStrategy are going to be down 2 to 3%. Now, Hood might not be down 2 to 3% if it's able to withstand some of the volatility. But Bitcoin was at 95, 96 on Friday when the stock market closed. It's at 93 and it was almost at 92. So I do think there will be a little bit of decline in some of those names as we open up. I don't think that should scare anyone. That's just the nature of holding these names. But the volatility on Bitcoin isn't helping. Now, the volatility on Bitcoin, although it's not helping Bitcoin itself, someone doesn't really care. And his name is Michael Saylor. So Michael Saylor put out his infamous tweet again today at 8 a.m. He's done this for 4 weeks in a row, where he says, basically, there's not enough blue lines on sailortracker.com. What is sailortracker.com? This is a website that essentially shows you every time Michael Saylor buys more Bitcoin, and it's highlighted by these green circles. So for the past 4 weeks, he has been using an at-the-money printer, essentially issuing shares to the public. A lot of those shares that were issued to the public were probably funds that were having to buy the stock based on NASDAQ ETF inflows, because MicroStrategy did get into the NASDAQ. And people have been buying his stock. He's been taking the money that he is getting from people buying the stock, and he's buying Bitcoin. And he's done it to the tune of, at this point, 440,000 Bitcoin that MicroStrategy is holding on the balance sheet. Last week, they bought 5,000 Bitcoin at 106,000. A little expensive, given we're at 93. But even Saylor's massive purchases are not keeping Bitcoin up too much, or at least not as much as they want to be up, or at least not as much as the market would hope they would be up, given we're ending the year probably below 100K. And I shouldn't say probably, because in the next 3 days, you never know. Bitcoin's volatile. It could spike up to 100. But so far, action does not look good. Strength does not look good. ETF inflows does not look good. And you got 2 more days left of the year. A lot of people just probably don't care about markets. They're not investing that much. So the idea that we're going to get massive inflows over the next couple of days, maybe it happens, maybe it doesn't. But as a result of that, Bitcoin is currently struggling from that perspective. Fartcoin is down 9% on the day. Solana's down. Ethereum's down. Dogecoin topped out at least at a local top at almost 50 cents. Now it's at 32 cents. So the entire, by the way, Dog with Hat is down like 40%. And that was one of the best meme coins in terms of just like communities that cared about the meme. That one has not performed over the last month. So really, I think the broader question here for everyone is, hey, is Bitcoin topping right now or not? I would say no, but you've got people like Tom Lee that definitely think it's going back to 60 before it hits 250. I do not think this is a top right now. It's acting kind of like it's a top, even though it's also acting like it should act, which is be super volatile after you're gone up 300%, take a little bit of a breather. So I think all of this is normal price action, but it's testing the patience of a lot of people that are holding onto Bitcoin proxies. Obviously, a lot of people that are holding MicroStrategy stock as well. So that's kind of the first thing that we're dealing with when it comes to Bitcoin. I have a long summary of a lot of other things that are happening in the markets that implicate the Santa Claus rally. I don't want to get into that summary because it's going to take me a good 15 minutes to get through it until we open at 8 p.m. So when we open at 8 p.m., we'll go through the tickers that open and their quotes, and then we'll get into that summary, which will really answer the question that I posed in the title: can we Santa rally into the last 2 days of December? And while we're waiting for that, let's put that question in the chat. Do you guys think we can we Santa rally into the end of the year? And what does that mean? That means we go up at least 1.5% from these levels. Do you think we can go up 1.5%, which is sort of the historical perspective of a Santa Claus rally from these levels? We got 2 days left to do it. And if we can do it in 2 days, I think it would be nice. If we don't do it in 2 days, I don't think we can necessarily be that upset about that. And I'm going to explain why we can't really be that upset if we don't actually Santa rally the way people want us to rally. So let me post this thread right here on X. I'm going to post this right here, and then we'll go through it in a little bit. Let me delete this. Okay, that's posted. So we'll look at that in a second. All right, let's see what the poll. What does the poll say? We've got 53% say yes, 48% say no. It's 50-50. A lot of these polls over the past couple of weeks have been pretty 50-50 in terms of how people are thinking of the future of the markets. And I think it's fair. I think it's very fair for us to be 50-50 right now in terms of the direction that the markets are going, because we are a little bit extended and PEs are trading at historical levels, but nonetheless, these are good companies. And the question becomes, do we want to be in those companies or not be in those companies? One macro data point before we get into the 8 p.m. overnight opening bell, I guess you can call it, is money market funds. For those that missed this stat last week, they increased by 54 billion, 6.8 trillion on the sides. Two implications to this. Number one, if we increase by 54 billion, then obviously people sold some stuff last week and dumped it into money market funds, probably because they're a little afraid and they want to protect their profits going into the end of the year, which is very reasonable. But also, there's $6.8 trillion on the sidelines. And that's a big deal. When you have $6.8 trillion on the sidelines, that means any massive dip, if we get one, there is liquidity to eat it up. No one can say there's no liquidity. There's definitely liquidity in the system. The question is going to be at what point? 5%, 10%, 15%, maybe no dip and money just starts chasing, as we've kind of seen over the past couple months, because I think definitely money started to chase some of these names what is going to be the situation or the setup for that money to leave money market funds and come back into the S&P 500. Now, remember, the last time we saw $500 billion leave money market funds and get into the S&P 500 was 2008. 2009, once we finished bottoming, I think at the end of 2008 or at the beginning of 2009, money market funds went from 4 trillion to 3.5 billion because 500 billion came into the S&P 500, and that gave 2010 a great year. Will this be the same situation? That's what I think we are going to be looking for going into next year. I may talk about the 10-year. Yes, we will talk about the 10-year after the opening bell at 8 p.m. and we run through the tickers. The 10-year is definitely something that is on my summary that I want to go through. There is a lot of issues with this damn 10-year, and it's just not moving the way the market wants it to move. But to be honest, it's not moving the way we want it to move, but it's being stubborn for a good reason. And we'll talk about why it's being stubborn. It just needs a little bit more evidence to stop being stubborn. And once it stops being stubborn, I think that's going to be really important. But it's kind of a wait and see game until the market is finally ready to move on from this narrative that they have, particularly around inflation. And that is the narrative that we'll be discussing to see if we can move forward from there. A lot of stock YouTubers are saying that the market is going down. Thoughts? I don't think it's just stock YouTubers. Quite frankly, I think this is the most bearish sentiment I've seen in the markets, or at least in the current state of equity and crypto markets in the past 2 months. I don't think it's YouTubers. I don't think it's just mainstream media, just like general people that I'm talking to, tweets that I'm seeing from different accounts. All of them are feeling a little, I don't even think bearish is the right word. It's not like, oh my God, big collapse, crash, sell everything. It's more so like, can we really go higher? We're trading at 22 times a trailing 12 months earnings on the S&P 500. Historical average is 18. Maybe we get to 23, 24. Do we really go to 30 without a pullback? Do we really go to 27, 28? Or if we go to 30 times earnings, is Google, Amazon, Meta, are they going to really justify that? I think these are the questions people are afraid about right now. No one has the answers, along with the fact that we have a new administration that we'll talk about, and everyone's a little bit afraid about that as well. And so we're kind of stuck trying to figure out what the hell is going to happen. But I don't think it's bearishness. I think people are just cautiously optimistic, but nonetheless still cautious about their optimism. All right, Robinhood, 8 p.m. We have opened. Let's take a look at what's up, what's down. Palantir is down 0.37%, 78.79. Bitcoin 93,400. Robinhood down 1%. This is what I thought would happen. 38.50. Bitcoin's down, therefore Robinhood's down. So 1.33% on Robinhood. MicroStrategy is down another 1%, 327. Tesla is down, not really down, 431. It's flat, down 0.08%, but we are red. IWM is down. S&P 500, 594. That's down. Dow Jones is actually up a little bit, 430. NVIDIA, 136. That is down about 1%. Wow, Robinhood just went green. That's got to be a bug. I think it's going to go back red pretty soon. Just went green. I'm pretty sure it'll go red pretty soon. 39, it probably goes back to that 38.50 range. If Robinhood can stay green in the midst of Bitcoin being below 95, that is very bullish Robinhood. By the way, tomorrow on Robinhood Weekly, we're going to have a guest who ran the numbers for December. And it's really interesting when you get into it. So we'll be talking to him tomorrow night on some of these Robinhood metrics. 32.95 for GameStop. That's up 2.33%. Tesla just went green, 431. SoFi, 15.96. That's flat, but it is slightly green. TFC at 43.81. That's up about 1/3%. DJT is down. Palantir 78.79. That's down. Honestly, we're seeing a lot more flatness than red. Even Coinbase is down 0.5%. You would think Coinbase would be down a lot more. Not really. It's not down that much. Let's check Boeing. We did have a horrible thing that happened over the weekend with Boeing. I'll talk about that as well. Boeing is down 5%, and it probably deserves to be down a lot more. I don't know if you guys heard about it, but in South Korea, I'm not going to play the video. The video is very graphic, so I don't want to play the video. But if you type in South Korea Boeing flight, an entire 737 Boeing failed to land on the runway, either because of a structural deficiency in the plane with the landing gear not unhatching, or there was actually something that happened in the plane. It will be a very long investigation for the next few years, and Boeing will probably say that it's not their fault, yada, yada. But 175 people lost their lives. Imagine you get on a flight, and the last thing that has to happen after traveling is just landing. This is why whenever you're on a flight, for those that travel, and I travel a lot, it's something you can't not be grateful for every time you land safe and sound. This plane wasn't able to land properly, and it blew up. And it's very, very, very sad to see that happen. So Boeing stock rightfully down 5 or 6%. Now, look, maybe it wasn't Boeing's fault. Maybe it wasn't a 737 issue. Maybe it was a problem with the actual internal operations of the airline. But the problem is the 737 has come up so many times in the past 2 years. And at this point, it's getting to the point where people are just like, well, what the hell is really happening here? Because this cannot keep going on further. So Boeing stock right there down about 5%. Wow. Robinhood somehow is green. I don't know how Hood is green with Bitcoin down, but that is really bullish. Maybe it's just low volume. Where's the volume? Volume's at? Yeah, very low volume, dude. Like less than 1,000 shares. So let's go back to the overnight markets in 30 minutes. We'll see if we get some more volume coming in. I still would have expected it to be down given Bitcoin's down, but everything else is red, but flattish red, kind of like futures, down 0.03%, not really down more than that. And you got some names that are green, but the green is also very slightly green as well. Okay, cool. So that's what we got in the overnight markets. We'll go back to that in 8:30 and see what happens from there. Let's get into my summary of what's going on right now for the Santa Claus rally. So let's transition to this. There's a lot of things to discuss here. I would love everybody's input. In terms of the poll, we have 53% say yes, 48% say no in regards to if a Santa Claus rally is going to happen or not. So let's get through what some of my thoughts are here on if this will happen. Okay, cool. So let's get started with the first bullet point. So 2 days left for a Santa Claus rally. Here's what we know. Historically, markets go up 1.5% during the Santa Claus rally in December. Given the red day we had on Friday, 3 days ago, we still haven't had that rally. So historically, like the numbers are still in our favor to get that rally because we haven't had it yet. However, the second thing we know is that we did have a 5% sell-off on 12/20, and during that same day, we rebounded from the lows aggressively. Maybe, and I actually think this is not the craziest thing to imagine, maybe that was our Santa Claus rally. And for those that don't know what I'm talking about, this is what I'm talking about. This was Christmas Eve. This picture right here, everything was green. And so because this was our Christmas Eve, right before Christmas, there's a part of me that thinks maybe this was the rally. This is when Robinhood was at 34. This is when Palantir was at 70. This is when S&P was at 577. Massive rebound. Not really to the levels we were at before J-Pow kind of messed everything up, but close to those levels. And that could have been the Santa Claus rally if we don't get it over the next 2 days. Third thing we know, Bitcoin that we talked about in the beginning of the show is showing material weakness. Sailors' buys aren't helping. The Bitcoin ETFs had their first red days of outflows after a month. Either Bitcoin breaks down and then rebounds, or we slowly grind higher, but most people do not have a definitive view on how this plays out. And if anyone tells you they have a definitive view, I think they're lying to you. Because whatever technical analyst that is out there that thinks they can say, oh, well, the fib line, blah, 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 this extension, MACD, it's all been wrong on Bitcoin. It's all been wrong the whole year on Bitcoin. Everyone's been wrong. It's gone up. There are some people who have been eternally bullish, which is great, but a lot of those people did not actually call exactly when it was going to happen. And so I think no one has a clue on Bitcoin as much as people try to say they have a clue. Tom Lee thinks we do see 60K before 250K. I think that's the most humble of the analysts that I've seen out there in terms of predicting Bitcoin. It's not super bearish like Bitcoin's a piece of crap, but it's also not super bullish like we're going to 200,000 tomorrow. So I think if I had to side with anybody, it would be Tom Lee, that I think we go lower before we go higher, but no one knows. Maybe we do go to 250. Maybe we stay at 60 and we never break back to 100. Like no one knows. But as an investor, it is very important to understand how the asset class is performing, because quite frankly, I think Bitcoin is simply a measure of how much excess liquidity is out there in the world. No one is investing in Bitcoin if they are struggling to pay their bills, which means if people have disposable income that they're willing to not purchase some of the most amazing tech companies in the world, but they're willing to speculate on something like Bitcoin, the thesis could be sound. And I think the thesis is very sound for Bitcoin, but it does mean that there's a lot of excess money out there. And so if that starts to go down, maybe some of that money is drying up. And that's something we need to think about. Now, here's the next stat. Here is the next stat. Now, this stat is kind of crazy, okay? Take a look at this. And I found this out today. I didn't even know about this. Equity ETF outflows last week were the largest we have seen since December 2022. $35 billion left ETFs last week. 2 weeks ago, this was right before J-Pow spoke, we had 62.5 billion in equity ETF volumes. And I think we're going to end the year at about $1 trillion net inflows, which is one of the best years we've ever had in the stock market. So we have seen a minimum of $14 billion of inflows every week into ETFs since the Fed began cutting in September. Since they gave us 50 bips, every week after that, we have seen at least $14 billion come into ETFs of fresh new capital. Last week was double that number, 14 to 35, a little bit more than double, but it was in outflows, not in inflows. Now, what does that mean? I do think that means, wait a second, we have to start thinking why in one of the last weeks of the year, you can see in the chart right there, did we get double the amount of outflows that we've been getting for the past 9 weeks in inflows? And why was it half the amount of the record amount of inflows we got, 62.5 billion versus 35.3 billion in outflows on the supposed week of the Santa Claus rally? And this one made my, I don't know what's the phrase, my head hurt for a little bit, made me scratch my head. Like, to lose 35 billion last week in equity ETF volumes or outflows after getting 62 billion means that whether it's justified or not, whether it's fund managers, whether it's people like you and me, whether it's big hedge funds, whatever it may be, last week was a week where people decided to take profits. They were either scared from JPOW, they were scared about the 10-year, which we'll talk about in a second. Maybe they're scared of the new Trump administration. Whatever they're scared of, they took profits. And that is the answer for everyone who's wondering, where is the Santa Claus rally? This chart right here is your answer. If the red circle right here, if that bar was even slightly positive or maybe even slightly lower, we would be above 6,000 on the S&P 500. But when $35 billion leaves in the matter of 5 days after 62 billion came in 15 days ago, you're going to have people just feel that shock and they're going to feel afraid, and you're going to have some people take profits and sell. And I think that's what happened last week with the equity markets. And then finally, money market funds saw 54 billion of inflows last week. This week, the week before, they saw 20 billion of outflows. People definitely took profits last week and stuffed that cash into money market funds, potentially waiting for a better opportunity to get back into markets, maybe waiting until we have a real dip, and are fine with settling on a 4% return, especially because they think that 4% is going to last at least another couple months, because most people don't think JPOW's cutting in January. They think he's probably going to cut in March. So you have a couple more months of a risk-free return of about 4%. So those are the 5 core things I think to analyze for the Santa Claus rally. Number 1, we still have 1.5% to go if we do get the rally. Number 2, I think we kind of have the rally on 1220 and maybe we don't get to see it again. Number 3, Bitcoin is obviously showing material weakness, and this is just obvious to anyone who's actually looking at Bitcoin. 4th, equity ETF outflows last week were the largest, which to me is a signal that people wanted to legitimately take profits last week. And then 5, money market funds, people are flowing to safety because they don't want some of that money to be stuck in the equity markets where the risk-free return is not risk-free. You have to take a massive risk if you're investing in Amazon. And as a result, people don't want to take that risk. Now, what does that mean for the 10-year? The 10-year is being more stubborn than a toddler at 4.6%. And it will only move down further if on rate cuts if the market believes that inflation is under control. What is the problem right here with the 10-year at 4.623%? It's up just a little bit as of 8:09 p.m. Eastern Standard Time. The problem is the 10-year doesn't believe that inflation is coming down. And the other problem here, and this is not an original argument, you guys have heard this many times if you've just been listening to how the 10-year operates, rates need to come down so that the housing market can come back, because as long as that market stays stagnant, what do I mean by stagnant? I mean, no one wants to sell because no one wants to buy. Therefore, you have a lot of stagnation in the housing market, and we're seeing that with the mortgage prices go above 7%, and we're also seeing that with the new home starts that were at their lowest levels in the past 5 years. One of the biggest contributors to an increasing CPI is shelter. So the Fed wants inflation to come down, but if inflation only comes down if rates come down, and the 10-year only comes down if the market believes that as a result of rates coming down, the byproduct will be that people will buy and sell homes, aka mortgage rates will come down, which means shelter inflation will start to substantially come down so that 2.7% of headline CPI can get closer to 2.3%, eventually to the Fed's target of 2%, which means we're in a conundrum here, which is that the 10-year is not going to really budge until they see meaningful progress on inflation. But the Fed is looking at the 10-year like, you guys can't get that progress until people start buying up treasuries so that yield can come down, because when people sell them off, that's when the yield goes higher. And the reason they're selling off treasuries is because they don't believe that the yield, or they don't believe that inflation will come down. Therefore, the inverse happens in terms of the yield appreciation. And as a result of that, the 10-year and the Fed are kind of just staring at each other, and no one knows what to do. The 10-year is not trusting the Fed's going to get inflation down. The Fed's like, hey, we can't get inflation down unless you come down, because if you come down, mortgage rates will come down. If mortgage rates comes down, shelter will come down. If shelter comes down, the CPI will come down, and all of us will be happy. But the 10 years like, no, we don't believe that. We just don't think that's going to be the case. As RC says right there, housing is absolutely right now a catch-22. And so I think this is one of the biggest issues in regards to this market that is also stopping the 10-year, or sorry, stopping the Santa Claus rally from actually happening. So the bond market knows this. They know eventually that shelter will come down and the 10-year will not be at these levels, but they're being stubborn. And I can't really blame them for being stubborn, especially towards the end of the year where the S&P 500 is at freaking 6,000 and the 10 years at 4.5%. Like, who thought that would happen? The 10 year was at 4.5 when the S&P 500 was at 493 in April. Now the S&P 500 has materially increased and the 10 year really hasn't gone down. And I think right now the entire bond market is trying to figure out how do we measure the risk and the actual return worth the risk on a bond versus on a stock. And bonds and stocks are obviously competing with each other when the yield on bonds continues to go higher. So I think the 10-year might want equities to come down a bit before they finally decide to capitulate, or they might want inflation to come down before they really decide, all right, there's no reason for staying at this 4.6 level. On top of all of this, to sum it up, we have a new administration coming in soon. No one knows what the implications of tariffs are going to be on inflation, supply chains, and rates. Just like the people that say they know exactly what's going to happen with Bitcoin, same thing as the people that are saying tariffs are going to be good, tariffs are going to be bad. No one knows. And so my bottom line is I wouldn't be surprised with a Santa Claus rally over the next 2 days. But I also think, I really think that 1220 rebound, which was an aggressive rebound from the bottom, was something we should all be thankful for, because that kind of was the rally. And it was a rally right before Christmas Eve. And Christmas would have kind of not been as fun if that rally didn't happen. And so now it's up to the markets to decide which direction they want to go. But these are the corresponding factors that the market has to navigate with and struggle with in order to figure out if we're going higher or if we're going lower. And that's my kind of ideas right now around the Santa Claus rally. MicroStrategy at 321. Holy crap. All right, let's go back to the overnight markets. Let's see what's happening here. Robinhood is down. Robinhood is down 38.65. I thought that would happen. Robinhood's down 1%. Palantir is down 1%, 78.18. MSTR, yeah, MSTR getting hit. 322, 321.4. Is Bitcoin continuing to go down? Bitcoin is continuing to go down. Bitcoin's not helping. Bitcoin's not helping at 93.2. And if Bitcoin goes below 90, then all hell's going to break loose in regards to the crypto proxies. But outside of the crypto proxies, that's the other issue. If Bitcoin goes down, and Bitcoin is a measure of liquidity, are people going to say, all right, money's drying up, even though there's $7 trillion on the sidelines? And if money's drying up, do people say, you know what? Amazon at 230 looks expensive now. Tesla at 450 looks expensive now. Palantir at 78 looks expensive. Robinhood at 38 looks expensive. Like, everything looks cheap until it's not, right? Everyone has dealt with that. So that's not to say this is the time to be bearish. That's rather the time to say, look, this is what's happening, and the market, and you've got to be just ready for whatever direction it goes, whether it's, hey, this is stupid. Bitcoin at 93,000 is a steal. Money comes in. That money keeps propping it up. Inflation comes down. We're well on our way towards a continuation of the bull market. Or I think the inevitable outcome is we're going to continue the bull market, but the volatility to get there, which is normal, it's part of investing, might happen earlier than we thought in January, February, as this Trump administration settles in and the market tries to interpret what's going to happen. On top of that, I mean, that's another thing I didn't talk about. What if we get a Bitcoin reserve? What if Trump comes out and says we're buying 200,000 Bitcoin a year, which is, I believe, the proposal from Senator Cynthia Lummis on the reserve? And what if you've got $200,000 times 100,000 of liquidity coming in every single year to buy up Bitcoin? Or here's another thing. What if Trump wants to do a Bitcoin reserve, but he doesn't want to buy at 93? He would be much happier to buy at 60. And you kind of have the US government that's waiting for the dip. I mean, there's a lot of different things that are happening here. And I think all of these things put together culminates into volatility. Although I think it still will be a pretty aggressive bull market towards the end of 2025, at least 10% on the S&P, so 6,500, which would be historical. But I say aggressive because for the S&P to still go up from here, given how high we are, it just means the best companies in the world are continuing to be the best companies in the world and executing and increasing their margins. But that has to happen. So far, it hasn't happened yet. And I think that's why we're playing a game of wait and see to see how long these stocks can continue performing. Just Paul says, wouldn't Congress need to approve the Bitcoin reserve limit? I can't see all the Republicans being aligned on this. Yes, Congress controls the power of the purse, so they absolutely will have to approve it. The problem is going to be who, so your argument right here is that the Republicans won't be aligned on it. The problem is if the Republicans are not aligned on it, but Trump is, do they want to go against Trump? I don't think they want to, right? Also, does it really hurt Republicans and their constituents if they vote no or yes on a Bitcoin reserve? Like, it's in the grand scheme of things, it's not a lot of money for the U.S. to spend, even if we lose all of it. Like, I still think it's worth the risk to the reward if in case Bitcoin does go to $1 million a coin. But B, it's like, does the senator from Alabama, are their constituents really going to be upset that they voted yes for a Bitcoin reserve? Maybe, probably not. And if they're not, I think the decision will be simple to just vote with the Republicans and kind of be unified on that sign. Also, from a political capital perspective, it would not be good if the first thing Trump wants to get passed, which might be a Bitcoin reserve, doesn't have unilateral agreement and congruence inside the Republican Party. That means there's too much division, and obviously that's not a good thing for Republicans to get their agenda across. So we're going to have to see. We're going to have to see what happens. But I think that's one of the big unknowns that we have going into January as well. So those are my thoughts on a Santa Claus rally. A lot of people have been asking me, what do you think about a Santa Claus rally? I think it happened. I mean, that's the most reasonable take I can give. I think it has already happened on 12/20. It was a hell of a reversal. Do I think it can happen again and we go up another, like, it's 1.5%. I mean, it's not even that crazy of a rally, but do I think that could happen? Yeah, of course. I think that could definitely happen. The problem is in the next 2 days, is the market ready to try to give us those gains after a good year already? Now, historically, the last couple of days of the year, the market melts up. And that's why it was a real surprise on Friday. I don't think anyone expected the red that we saw on Friday. Like, I was pretty confused the whole day why we were selling off that aggressively. And now, based on the data that we've seen from the 10-year, money market funds, equity, ETF outflows being at 35 billion, it's pretty obvious. People took profits and they said goodnight. And people will have to pay their taxes on those profits next year. They won't have to get some extra time to wait to pay those taxes. But I think at this point, people just didn't care. And people, meaning fund managers, money managers, retail, whoever it was, $35 billion left last week. And we're going to have to see if it comes back. One more thing that happened on Friday, then we'll move on, is Cathie Wood. So she bought, for all the AMD people, you're going to be happy about this, 70,093 shares of AMD. So she is on the AMD bandwagon and she is buying heavily. But she sold 543,000 shares of Archer. So a decent amount of her Archer position. And she sold another 62,000 shares of Rocket Lab. Now, Rocket Lab, she did start buying at $6-7. So she's up substantially on that. And I think that makes sense to take a little bit off the top and put that money somewhere else. Some people may disagree and they may say, let your winners ride, but it's kind of how she wants to manage the fund. AMD seems like the next big bet that Cathie is making. She's been buying AMD for a while. This is not the first. I mean, I think she started buying at 160, 170. So she is definitely buying the dip on this one. But nonetheless, she is in this name and she probably thinks there's going to be some rebound on AMD versus the current levels of NVIDIA. So that's what I got. That's what I got in the context of the Santa Claus rally. June says, I just made a bomb salad, kale, chicken, avocado, pomegranate seeds, oranges, pecans, olive oil, and balsamic vinegar. That sounds like a watch list with a bunch of stocks in it. It sounds like you just threw all your stocks into your watch list. That sounds like a good salad. It sounds like it's not too bad. What did you guys have for dinner? Put in the chat as well what you guys had for dinner. I am back. You know, my sister laughs when I say this, but I am back to the gym, baby, starting tomorrow. I'm back to the gym. I know it's the typical new year, new me type of thing, but I don't care. It's a new year. It's a new me. Back to the gym tomorrow. I'm officially done with fast food, soda, all that junk food, and we're going into the new year, dude. No, but we actually are starting tomorrow. That's why, June, I'm gonna be having salads like you starting tomorrow. It's legit. Yes, it's the typical New Year's resolution, but we're getting healthy this year, bro. We're getting healthy. Look, when I put my mind to something, I'm not always gonna succeed, but I try really hard. And I know that about me. At this point, at 27 years old, I know that when I say I'm not going to drink soda, I'm probably not going to drink soda. The problem is all of 2024, I didn't really have the mindset of I'm not, you know what I had the mindset of? I'm going to stream every day, market open, market close. That was my mindset, and I was able to execute that. Now we got to add the health part of it. And unfortunately, I use streaming as a little bit of an excuse to be unhealthy. But now the mindset in 2025 is going to be, I'm going to still stream market open, market close, but I'm going to eat healthy throughout the day as well. So you guys will know if it works. You guys will see a material decline in my face. It's going to be pretty obvious. If you guys saw me from June 2022 to October 2023, it was like night and day in terms of just like the puffiness of my face and all that stuff. So you guys will see it, and you guys might not see it if I don't stay committed, but I think I will be committed. Amit, do you drink alcohol? I do not, but we have that Robin Hood whiskey right there that they gave me in March. We're drinking that on Tuesday after hopefully we take some profits on those options. So Tuesday market close, we'll be drinking that alcohol. I'm going to have a chaser with me, even though everyone's telling me to drink it straight. I'm not going to be able to drink it straight. And so we'll be doing that on Tuesday. Okay, so it's a couple of charts I want to show you guys as well, adding to this kind of argument around what we should be expecting in 2025. Now, this chart is a little scary, but nonetheless, I still think this chart is relevant. The contribution of the largest 7 tech stocks to the S&P 500. In the dot-com bubble, it was 19% of the index weight and 8% of the index's EPS. Let me say that again. The top 7 tech stocks in 2000 were 19% of the index and 8% of the index's earnings per share. Today, it is 35% of the index, a little bit under a double from what it was 18 years ago. And it's 22%. That is more than triple the index earnings per shares in 2024. So why do I show this chart and why do I say it's scary and bullish at the same time? It's bullish, obviously, because it's like, if tech companies continue to keep being tech companies, Amazon, Meta, Apple, Microsoft, their network effects don't stop becoming more valuable, cloud computing, AI, Copilot, yada, yada, the whole gauntlet of all the bullish reasons to own the Mag 7 continue to be bullish, then this is going to get higher and it's not going to freaking matter. It is not going to matter if in 2025, the Mag 7 are 40 or 45% of the S&P 500. No one's going to care because these are going to be the most important companies in the world, and it is what it is. It's their world. We're living in it. They provide all the jobs, all the technology, yada, 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 and we have to just believe in that thesis. But if the market is not willing to pay a 42 PE for Apple, which I think they're begrudgingly paying right now, but I personally don't think that's justified. I think Tesla's extended right here. I would be willing to buy Tesla in the 400 range just off of my own personal theses I have long-term for the company, but that's not how Wall Street works. And are they willing to pay 150 PE for Tesla right now? If the market wakes up in 2025, because maybe Trump says something, maybe the 10-year goes higher, maybe yada, yada, whatever reason, maybe Amazon misses on earnings, maybe it's just not a good earnings for one of these tech names. Does the market wake up and say, what the heck is wrong with us? Why are we piling in all of our money into 7 names? Right? Like, that's a legitimate thing. I think no one can be dismissive of. Now, I would love to buy the dip on Meta if it goes below 500 or 450. I would love Tesla at 300. I would love Google back at 150. I would love Amazon at 180. But these are material 10 to 15% declines to get those prices. So I don't think anyone would be upset to buy those dips. The question is, will we have those dips? Will the market actually wake up and say we can't afford to keep paying these multiples? Theoretically, when multiples expand to this level, historically, there is a top, and those multiples take a breather, even if it's for a couple of years, just like we had in 2021, Amazon, Google back to 80, came all the way back up at this point to all-time highs. Do we have to go through that again? Now, granted, since we went through that in 2022 in a rising interest rate environment, one could say the macroeconomics are not on the side of the bears because now we have lowering rates, which is bullish across the board for every company, much less the Mag 7. The cost of capital, credit spreads, all of these things get to be more enticing for the bond markets, definitely more enticing for the equity markets, and they prove to be a tailwind for companies that need to borrow capital. And the more growth you have in a low risk, a low rate environment, the higher premium they pay for that growth. But is the market ready to get to that point? And is the market ready to give those names the level of earnings and margin expansion that they're looking for going into 2025? I mean, if you're buying tech, you're expecting at least 20%, right? At least 10 to 15%. You're expecting some level of appreciation. And I think the unknown for 2025 is, does Meta end the year flat at 500, which no one could really say is a bad thing? Or does Meta go to 750 because the earnings growth is so good? My gut tells me, just to make my position extremely clear, I think we're going higher. And I think we're compounding in the NASDAQ next year by a minimum of 15%, because I think these are the best companies in the world and betting against them is stupid. But I don't think that comes without the volatility. And in 2024, it didn't come without the volatility. The only problem is there were 3 volatile days, one in April, one big one in August, which was like the most important one, and then one in September. Outside of that, there was no real volatility to get the gains. It was those 3 days, and those 3 days were amazing opportunities to buy the dip. So maybe that happens in 2025, maybe that doesn't, but that's what ultimately we're going to have to see. Okay, let's go to after hours or the overnight markets. You're saying stocks are going back up. Where's Palantir? Palantir is slightly green. Well, not green yet, but it's back from the absolute bottom. It was at 77. Now it's at 78.50. Robinhood as well. Yeah, 38.78. It was down below 38 or close to 38. MicroStrategy up from 320 to 325. So we're seeing some green there. Is Tesla green? Tesla's green. Look at Tesla, 433. That's up. Futures, I think, are still flat, so that's not having too much of an impact. But yeah, basically the market's not as red as some people might have thought it was when it would open. And it's definitely not super green either. It's relatively flat. You got some names are up, some names are down. SoFi's down a little bit at 1590. Tesla's up at 433, but it's not like those prices are that different from what we had on Friday when the market was closed. In terms of Boeing was down 5%. Even Boeing recovered. It's up, well, not totally, but it's down 3% instead of being down 5%. So again, if money continues to come in and buy up these names, I don't think you fight it. And I think the problem with the bears right now is they're upset. They're fighting the what I would call secular bull market. And you can only fight it for so long. There will be some days where the bears have acted as if they've won on volatility like they did on December 20th. But December 20th was a great dip. I mean, you got to buy Robinhood at $34. We haven't seen that price in over a couple months. You got to buy Tesla at $400. Like these, like given Tesla's repricing, I think 400 is a fair price. I don't think it's that crazy. So now either that dip was a bull trap and we're going to go much lower than those prices in the future, or that was the dip, that was the Santa Claus rally that did get people to panic sell, that did get more money to come in. And 2025, we're going to have to see a different interpretation of how people understand if these stocks get to go higher or not. But that's the fun about being an investor. None of us know. None of us know. We just get to enjoy the journey every single day. Amit, what's your price target for 2025 for Hood? I think 50 by the end of next year is very possible for Hood, if not higher. It is highly contingent on the market. If the S&P compounds 10, 15%, I think Robinhood probably compounds 30, 40%. And then it's also contingent on Bitcoin. If Bitcoin goes back to 60, again, that doesn't kill Robinhood like it kills MicroStrategy or Coinbase, but it does put a little bit of a dent in Robinhood. That is a dip I buy because I don't buy Robinhood because of crypto. It's a nice catalyst, but I buy Robinhood because I think they're going to be one of the biggest financial services company over the next decade. So I buy any dip if we get back into the 20s, high 20s, low 20s. If that happens, I think high 20s, 27, 28 is kind of where it would be. But we got to see if that actually plays out. John says this is a good time to make sure you love the companies you invest in. That's all. I 1000% agree with that as well. If there are any positions in your portfolio that you aren't happy with personally for whatever reason, you don't like the CEO, something that just gives you a little bit of a weird vibe, I think this is the time to consolidate into names that you like, because I do agree with Chris, who has said this many times. Next year is going to be a stock picker's market. I don't think you could just buy the index and chill. This year you could buy the index and chill. This year has been a very easy year to buy the index, NASDAQ, S&P, IWM, whatever it is. The next year, is it that easy? I don't know. I think it's going to be much more rooted in what names do you have and do those individual names have catalysts or not. And if they don't, then that might be something that the market has to reprice and figure out. Okay, let me do some super chats and then we'll keep going from there. Drew, thank you for becoming a channel member. I appreciate it. RF Andy, thank you for the $2 super chat. Sunday Fun Day, thank you for being here, Andy. Appreciate you. Rob has 2 super chats for $10. Rob, thank you for the super chats. He says, Amit, do you think a Bitcoin reserve is a good idea for America? And what is your price target for Palantir in 2025? Yes, I think a Bitcoin reserve is a good idea for America. I think we have so much debt that we have no realistic way to get out of it. I think Doge is cool, but will Doge actually get anything done? I have no idea. I honestly, to me, Bitcoin is a call option on if this thing somehow does get to millions of dollars a coin and the United States owns a couple million Bitcoin, maybe my kids will be able to benefit from that as a way to pay off some of the debt. Because right now, I don't think Trump or anyone in the White House has actually given a plan for how we go from a deficit to a surplus. And maybe that does happen. I'd be very happy if it does. But if it doesn't, and we're going to keep money printing, I think Bitcoin kind of might be the only solution. Maybe it's not, maybe it is, but I think as a call option, it's not the worst thing in the world, given that we waste so much money on other things as well. In terms of Palantir price target for 2025, so this one's tricky This one's very tricky. I'd love to know people's comments in the chat on this. Look, Karp is coming out with a book in February, and that is going to be a very important book. That book is going to have a ton of marketing for Karp. I think he's going to go on a book tour. I think a lot of people that don't know what Palantir is or who Alex Karp is are going to discover who he is pretty soon next year. And so I think that's a tailwind, believe it or not. And this is something the other analysts on Wall Street won't talk about. They won't think of a book as a tailwind because, quite frankly, they haven't been able to see any of the real tailwinds for Palantir. But I think when people are on board with Karp's message around how technology companies should operate from a perspective of how do we defend Western values and how do we manifest those Western values into something that is agreeable across the board, then I think people get interested in what the hell is Palantir doing. I mean, I think Palantir's brand right now is landing them more deals because everyone wants to hang out with the cool kid at the party. And if Palantir is the coolest kid, you might have other companies that were thinking of adopting some type of AI data system platform, reaching out and just saying, hey, can we have a conversation? So I think that brand effect is going to be very important. And I think that could take Palantir higher. Now, having said that, on Palantir Weekly, we talked about the EPS miss that looks inevitable because of the SARS expense. And again, that's not Palantir's fault. That's because the stock went up a lot and employees took profits as they should. And so that's a $120 million SARS expense we have to take. I think as soon as that gets triggered, the algos take it down simply because the market's probably not pricing it in as easily or as like the market should price it in. The market just doesn't know about it. And we saw this with Robinhood, right? Robinhood, phenomenal quarter in Q3, missed on one number for a reason that was already known. I didn't know about it, which was my fault, but analysts knew that this was a thing, and then it tanked to 25%. So to say that wouldn't happen to a stock like Palantir that's trading at elevated levels, I think it could happen. However, I think that dip gets bought. I really do. I think 70 gets bought. I get 60 gets bought. I think 50 gets bought. And I said this on Finance Junkies today. I think max pain for Palantir is $40. And if I'm wrong, I'll eat my words. But I think, and quite frankly, that would be a 50% drawdown from 80. So it's like if we go down more than 50%, then it's like, all right, something happened in regards to sentiment on Palantir that did a full 180. But I think $40 is max pain. So the reason I'm struggling to give a price target on Palantir is because if we go back down to 40, where do we end the year? Do we go back up to 80? Because we would all be happy, but like it would still be flat. Or do we never get that dip? Do we go to maybe 65, maybe 70 if the market takes a pullback, and then we propel all the way to 95, 100? I don't know. I have no clue. It's one of those things where like I feel like I should know for Palantir, but I just don't know. My gut tells me we're going to end the year higher than 80 next year on Palantir. Is that number 85? Is that number 90? Is that number 100? Is that number 125? I don't know. What I do know is that they have to prove the growth can live up to the expectations. I personally think we get 40% growth by the end of the year. If that happens, I think we meaningfully are above $80 because 40% growth is no joke. And although people will complain the valuation, the premium, I don't think it's going to matter. I think people are going to say Palantir, 40% growth, only AI name in the sector. Karp's going on all these freaking shows, doing his book tour. He's becoming a celebrity. Like that is going to create a lot of excitement and momentum. And the number one thing about this is retail is not selling. And if retail's not, like even Vitaly on the show, he was like, well, you should sell some of your position. I'm like, why? Like, no, like I don't want to sell. Like, I just want to let it. Because again, if it goes down, I'm in this thing for a long time. I've mentally prepared myself to be in here. You know, these shares are going to my kids. No, I'm just kidding. But like these shares are going to be here for a while, right? When the wife wants to sell the shares to buy a house, I'm going to tell her to just like never utter those words again in her life, right? So from that perspective, I'm not upset at buying again at 40 if we get there. I just don't think we're going to get there because I think if everyone thinks we're going to get there, then that's not going to happen. But I also think that doesn't mean you sell a winner this early. I don't think that happens yet. So those are my thoughts on Palantir and the price action next year. I think it's going to be a very exciting year for Palantir, but I don't know if we take a meaningful downturn or if we kind of go up a little bit. And we end out the year a bit more positive. I did a poll on X a couple weeks ago, and it was, hey, how do you think we end off the year? And it's basically 50-50. 50% of people out of 3,000 votes think we end above 6,000. 50% say we end below. So again, I think someone asked in the comments before, stock YouTubers are getting bearish. I don't think it's stock YouTubers. I think it's the entire market participants, right? The entire global population of participants are kind of confused right here because you would see a little bit more definitive of an angle if everyone was bearish, everyone was bullish, which is kind of bullish in and of itself. Because if everyone's bullish, That's, technically a little scary. If everyone's bearish, then that's a very easy buy the dip, but there's no way everyone could be bearish right here because we're at all-time highs. And there's also no way everyone should be bullish, because to get to those all-time highs or to keep those all-time highs, we have to be able to put up with the valuations that have obviously gotten much stronger than where they were a few months ago. Now, if you look at the fear and greed index, this is one of the easiest ways to say we're going higher. We're only at 34 on fear. We haven't even hit neutral yet. We have not even hit neutral yet. And so the fact that we haven't hit neutral yet, or much less greed, means that maybe there is a lot of juice left. You got Bitcoin right here at 94,000. Bitcoin getting a nice 500-point candle right here. Not bad. Getting some love on Bitcoin. And that could be something that takes the markets at least higher over the next 2 days going into 2025. So those are my thoughts in the context of Palantir, and also my thoughts into this Santa Claus rally for next year. Someone said, Amit, what are your favorite small caps for next year? I think, Harry, you asked this question. So my favorite small cap is a company that I'm developing a position in and that I'm getting a lot more bullish on, and it is what it is. Like, once you get into a name, you get deep into the name. I'm getting more bullish on Grab, folks. I'm getting a lot more bullish on Grab. I bought some more on Friday. At this point, 30% of the stock is cash. Now, I want to caveat this. I want to show you guys something new I learned about Grab, but let me caveat this with 4 billion shares outstanding. It is not an easy mover. If you're buying this expecting it to go up overnight, it's just not going to happen. You're going to be disappointed. With 4 billion shares, like mathematically, it needs a catalyst to move, and there's no catalyst until earnings. So I think it's probably dead money until earnings. Number two, there's another thing that has to do with the 10-year. The dollar is too damn strong. The dollar is too damn strong. And until this dollar comes down, look at this thing. It's at 108. We need the dollar trading below 100 for foreign exchange to be easier on the new banks, the Mercado Libres, the Grabs of the world. That could also be a headwind, because that's going to mess up their growth rates. So those are two things you have to think about when it comes to a company like Grab. 4 billion shares outstanding. I think it's cheap right now, because I think in long term, this thing is closer to 15, 20 bucks. But it'll take time to get there. And I also think that the strong dollar can have some issues in regards to the ability for Grab to meaningfully get price appreciation, given it's in a different country. Having said that, I did some more due diligence over the weekend, and just one quick thing that I want to share with everyone on Grab. I realized something around my own thesis on Grab. Grab is not a ride-hailing app. It's not a ride-hailing app. Grab is a financial services company that's using ride-hailing as their Trojan horse to just grow more. And this is one paragraph from the Q3 earnings transcript that kind of highlights what this is. So here's what the CFO said. We've been able to bring in deposits much faster and with less cost than we've ever planned. So you've seen that positive momentum across GXS Bank in Singapore and GXX Bank in Malaysia. These are two banks that Grab owns outright. They have a banking charter for them, where customer deposits have grown 50% quarter over quarter. So over 1 billion now in the third quarter. And then Superbank, which is the Indonesian bank they also have, which only just launched in July, hit 2 million accounts by October. So a really tremendous uptake. We're able to raise deposits at a very low cost, and therefore, because of the focus we have on data science and our lending model, you can see very clearly that we can continue this very positive data flywheel for lending. So not only is Grab expanding the super app in terms of groceries, ride hailing, all this stuff, they have an advertising business that's growing like crazy. I'm going to show you guys one more quote about what they said about advertising. And then they have this fintech giant inside of a part of the world that is massively unbanked. Malaysia, Vietnam, Thailand, etc. You got over 700 million people in Southeast Asia. 400 million of them do not have a bank. So over 50% of those 700 million people, they have nowhere to put their money. That is the opportunity Grab's going after. And how do they get them to put their money into Grab's bank? Because they're using Grab every day. Like, when I realized this over the weekend, it was like I just read a lot more into the company, read a lot more into some of these stats. I was like, holy crap, this is not a ride-hailing app. And everyone who's saying it's a ride-hailing app right now is just wrong. This is an app that's using ride-hailing, which is a low-margin business, as a way to have such a sticky relationship with their users to then build out an entire ecosystem, which is what I think can take this to a $100 billion company. Right now, it's sitting at 20 billion with 6 billion in cash. Here's the final thing I'll say on Grab. This is another paragraph from their earnings call. This thing was incredible. So take a look at this. This is one of the C-suites. I was just in Indonesia 2 weeks ago, and I met with a burger chain entrepreneur, and all of his advertising was done through Grab. both for delivery and for their dining in, which was really powering great success. And he had also taken a loan through Grab. Not only is he selling the burgers from Grab, not only is he advertising on Grab, he's also getting the money to get the raw materials to make the burgers from Grab. This is a behemoth in the making if they're able to scale. And this right here is what's getting me more excited about the company. This guy didn't have any account management, so he had actually proposed the loan, I presume, through a whitelisting process by us on the back end, and taken down the loan in order to order the beef to manage his working capital for his supply chain for beef, which was obviously his most expensive ingredient. And that was allowing him to grow even faster and open more outlets. So I think self-serve is really a key part of our strategy because many of our merchants are small and many of them are in far-flung places. If the merchants start using Grab as an advertising vehicle, as a vehicle to deliver their products, and as a vehicle to then get a loan, aka they have a banking relationship, with loans are very high margin for these banks, that gets very, very exciting. On top of that, from the advertising perspective, one thing that's also really unique about Grab is that these guys are rooted in data science and analytics. Like I'll post some more stuff later on X and you guys can go through it. But if you look at some of the work they're doing in AI, they're not just the company saying, oh, we're using AI to use AI. These guys have over 120 different models that they are training all at once on the proprietary, that's the key word, proprietary data, because no one else has the relationship with their customers that they have, that they're getting from their users, 42 million of them every month and growing. And that is allowing them to get better risk models, better credit models, better lending models, better models on how they can target customers. Oh, their advertising business, take a listen to this. Small merchants only pay if people order from the restaurant. That to me is like, because think about it. If you're a small burger shop in Indonesia and you can't afford to pay $20 and hope that it works, like that $20 better result in $25 because you're a small business and you need to make sure people actually buy your products. If you can spend 20 and make 25 and only spend the 20 if you're guaranteed the 25, you're not going to any other advertising platform on the planet. This is why Facebook is so big, because you put $1 into Facebook, you get $2 back. Like people are going to stay with Facebook forever. If Grab can replicate that for their clients, that is a big deal. It is a very, very big deal. That is a sticky relationship, and at a $20 billion market cap with a $14 billion enterprise value, because it has $6 billion in cash, I think that's cheap. I think that becomes really cheap. So look, it is going to be a slow mover. It's going to take time. I like this thesis. A lot of people are still poo-pooing the name, which I like. Most people haven't discovered it yet. Most people are still a little afraid of the name. Someone on Twitter was like, oh, but the CCP is going to shut them down. I'm like, okay, this is really good, because if you think this is, if you think Southeast Asia is part of China and that's your bear case, then I love this. That's as similar to people saying GameStop is still an issue for Robinhood. It's like, if that's the bear case, or Palantir is a consulting company, if those are the bear cases that I'm seeing, then I'm pretty excited. Having said that, if we get a market correction, Grab's going below $4. So let me say that again. If we get a market correction, Grab is going below $4. So if you buy it right here, you've got to be ready to DCA like I am. Because if we get a correction, it doesn't matter if you're Grab or Fab or Stab or whatever the heck your ticker symbol, you're going down. Because we have not had a real correction since August. And if we're due for one, then everything's getting hit. But I think that will be a good opportunity. Someone says right here that is in the chat, I'm about to use Grab right now. I hold the stock because of my daily experience with Grab. I've had a lot of you guys message me on Twitter and tell me about your daily experience with Grab. And although I can't use it, which sucks, I'm relying on a lot of strangers in Southeast Asia that are telling me every single day, like, hey, this is something we're using, and we're using it religiously every single day for a reason. Now, here's one final stat on Grab, and then I'll move on. Although I can't like order from anything because it's in Southeast Asia, Grab is number 35 in the United States App Store in the travel section. Grab is number 35 in the USA App Store for iOS. Why? And this is why Q4 I think is going to be good. You have a big tailwind of tourism in Southeast Asia. When Americans go to Southeast Asia, they need to order food. They need to get Ubers technically to pick them up. And if Uber's not there and Uber Eats is not there, DoorDash is not there, what's the number one thing that's there? What's the number one thing that's plastered all over the billboards? Grab. So the fact that Grab is number 35 in the United States, even though you can't even use the app in the United States, even though you could download the app, is pretty damn incredible to me. And it shows how sticky that product is across even the tourism sector of the broader population that wants to use it. Harry says, do they have any ambitions to expand into the Western world, or is this mainly an Asian phenomena for slightly less developed economies? This is definitely the latter. It is an Asian phenomena for less developed economies, and I don't think they need to expand into the West. They probably will fail if they expand into the West because Uber and DoorDash are going to take their lunch, literally and metaphorically. But again, for those that don't understand Grab's history with Uber, they beat Uber in 2018. Uber ended up buying a stake in Grab because they couldn't compete with Grab because users just weren't able to meaningfully engage with the product the way that they were able to engage with a native product like Grab. And Grab won. So there's a 700 million person TAM that Grab's going after. They barely have a couple tens of millions of people, 42 million people, which is good, but they can get to 400 million monthly active users over the next 5 years. They just got to keep growing. And if they do, I think Grab is a much bigger company than it is today. So those are my thoughts on Grab, and that is the small cap that I am buying most heavily next year. I guess 20 billion is a small cap, even though it's not really small, but 20 billion is smaller than, you know, Amazon or Meta. And that's one that I'm getting a lot more excited for. Okay, cool. So that was Grab. Other headlines that we have. Here's another chart that I've been looking at over the past couple of days. This one speaks to the same argument about breadth versus depth. So this is the forward PE ratio for the top 10 companies in the S&P 500 versus the remaining 490 stocks. The ratio for the S&P 500 top 10 is 30 times price to earnings. Again, for an index, that is relatively expensive. And for the other 490, it's 20. So again, my view is that tech compounds and that growth is not stopping and that these guys are going to keep expanding their margins, yada, yada. But it's hard to argue with these charts in terms of just how expensive some of these names have gotten compared to the other 490 companies that have just not really participated in the rally. Now, some of them have participated in the rally very well. For example, here's a name I heard about over the weekend. I had no idea this thing was up 100% year to date. Does anyone know what Boot Barn is? Boot Barn is up 107% year to date. Now, this is a small cap. It's not an S&P 500 company, but my point is random companies that are not meme stocks that have just had really good earnings have gone up. And Boot Barn right here is where you can buy boots. You can buy premium exotic boots. That stock is up 100% year to date. So the point I'm trying to make here is that do more companies like Boot Barn expand next year and we get the S&P 490 participate? Or does all that capital go to Amazon and Meta and Google? I don't think we know, but I think the market's definitely trying to figure that out. And that's why we are dealing with some of the volatility that we're currently dealing with right now. I've never heard of Boot Barn, bro. I heard of it. I was like, what? What is Boot Barn? Like, but I was like, it's up 100%. Oh, here's another one that you guys probably know about. Let's see if this one's still up a lot. Yeah, here's another one. This one's going to be a little bit more relatable for those because I'm sure you guys have seen the commercials, especially if you're in the United States. I don't know if it's international, but definitely US folks will know about this. Build-A-Bear stock is up 103% year to date. Build-A-Bear. You go in and you build a bear. Why is that up 103%? I have no clue, but it's up 103%. And so I think a lot of people are asking, will we see this type of market momentum across the board, not just stuck in these large caps going into 2025? And because of those unknowns, which it needs to be unknown, that's what kind of makes a market. No one really understands it. That is going to determine if things are cheap or if things are expensive going into next year. But we're going to find out. We're going to find out pretty soon in 2025. Yeah, $600 million market cap. So small company, obviously these are small caps, but these are not meme stocks. These are stocks that if you can see how they go up, it's always after earnings. They show more profitability, they show more revenue, more growth, and the market rewards them. And so there are some meme stocks that are out there that are going up to just go up. But a lot of these names have gone up just off good earnings. And if those good earnings continue, then maybe we don't need to see some definitive pullback in 2025. Yeah, look at this one. Cheesecake. It's up 33% this year, and it's still trading at a 13 PE. The point is there are opportunities next year. There are massive. I think Grab is one of those opportunities. I think Tesla still will be an opportunity next year, even if it's volatile. I think Hood will be an opportunity if it can deal with Bitcoin potentially going down but coming back up. I think Palantir will be an opportunity if they can accelerate growth to 35%. I think opportunity is going to be out there. I think Verizon has been pretty stagnating for the past couple of months. I think Verizon, they have a good quarter, surprised a little bit on the upside or on the bottom line. Verizon could get back to $48 where it was at for the past 5 years until it fell to 29. Now it's back at like $39. So there's going to be a lot of opportunities next year, but it's going to be up to JPOW, the 10-year, the Fed, and ultimately interest rates to determine where the market decides to go. And if those opportunities actually materialize in a meaningful way. Marcel shows at Build-A-Bear for kids' birthdays, you can get the bear for the price of the age of the kid. Really? I did not know that. I paid $8 for my niece's teddy bear, but they get you with the accessories. Well, whatever they're doing, it's working. I mean, you looking at their stock, yeah, you would think they've bought a bunch of GPUs and they're training models on the bears or something. 103% is no joke. But that's what you got for Build-A-Bear. So it's pretty damn incredible in terms of seeing how some of these companies have begun to expand. Okay, some other headlines. So we talked about crypto. We talked about breadth versus depth in the market. We talked about the S&P 493 versus the S&P 7, which is going to be controlling the rest of the markets most likely. One quick thing on the S&P 500. Chamath also is getting on this bandwagon. Chamath right here says this needs to be fixed or it will end in a disaster. And what he's talking about is the lack of diversification in the S&P 500, given the top 10 stocks are now 39.9% of the index, which is what we just talked about. He says average Americans are told to buy the S&P 500 in part because Buffett told them to. They were told they would pay very little and get diversification in the 500 best companies on earth to ride out the storms. But as concentrations rise in a very small percentage of these stocks, the risks don't fall, they rise. If the indices don't cap the max percentage of any one stock, you essentially are holding a direct bet on that one company. In this case, see that when you buy an index of 500 companies, you're really buying 10 companies with 490 others thrown in. If there's any market volatility, the lack of diversification could cause massive impairment. That's okay if you're a professional and that's what you're betting on, but most ETF buyers aren't professional stock traders, and they will be in for a rude awakening if this isn't addressed. Now, granted, I don't know. Chamath has been bearish all year, and he's been wrong all year. I mean, he was right in 2021 when he was calling a top, but in 2024, probably around, I think, April, May, he started getting bearish, and obviously he's been wrong. I think he does have a point right here that the S&P 500 is obviously overly concentrated. The problem is, do we really set up a regulation or a law that stops an index in the markets from having a certain percentage allocation on a name just based on the stock going up? Maybe, but I don't know. I think that could have some downside effects as well, because I think part of the S&P 500's gain this year has been capturing the 70, 80, 40, 80% gains in all of the big companies. Even Apple is up 40% this year. And part of capturing it means maybe you don't have a cap on how concentrated they can become. Versus capping your profits or capping the allocation weighting that you can have, and then Apple continues to run another 20%, and then the S&P 500 gets like 0% of that increase in share price. I don't think there's an easy solution to this, but I think the one thing he's right about is that we're top heavy in this market. And the solution to being top heavy is the top gets heavier, or the top falls out and the bottom of that top, the bottom of those 493 companies actually get some of the heaviness that was stuck at the top. Either that's what happens and we really diversify, which means Meta goes back lower, Google goes back lower, and that's okay. And as a society, we can deal with that because the other names rise up, or Meta, Google, Amazon say, screw you to the other 493 companies, and they just keep going higher. And they don't care about what anyone thinks because those names continuously have the profits and the momentum to not have to care about what anyone thinks. Here's the funny thing that happens if those names do take a 15, 20% decline. They just increase their buybacks. I mean, if Google falls back to 140 for whatever reason, it's at 190. They're already buying 70 billion of stock. They'll probably buy another 20 billion. Apple, if Apple somehow comes back to 180 or 170 or 210, Apple's probably going to buy another couple billion of stock. And those buybacks, we saw that chart on Friday's show, $947 billion have been bought back of stock in the S&P 500 this year. That's almost $1 trillion of earnings growth, because technically your earnings, I guess, show more growth if you have less shares because it's earnings per share. So if you have less shares, the earnings grow because you have less shares. And if you take a higher number, divide that by a smaller number, you get a bigger number. So 947 billion in buybacks. I mean, that's another question for 2025. Will that continue or will that not? These are the existential questions of 2025, and it will determine where the market ultimately goes. Peter says, Amit, pull up the 5-year chart on Tesla stock at 40% pullbacks like 4 times. It'll come, but when it does come, we will rally in the market. Yeah, I agree. And look, Tesla had at one point a 70% pullback, and look at Tesla here today. So the pullbacks are inevitable. That's not what I'm worried about. I'm more so worried about when the hell do I buy, right? Like I like no one wants to time the market. I don't think anyone should time the market, but at some level, it's okay to try to time certain parts of it. Like it's okay to say, you know what, I'm gonna wait a little bit and not jump in right here. And maybe you're gonna be wrong for that. And historically that has happened. But there are some times where if you're analyzing the markets every day, you can realize, well, okay, this is a little extended. I'm just gonna chill a little bit right here. I'm not gonna go just balls deep into something until it has some more momentum, until it shows me a little bit more consolidation, and then I'll get in. And I think that's what everyone's trying to figure out. Even Warren Buffett, with $300 billion on the sidelines, Buffett started buying Oxy. He started buying SiriusXM, which I still have no freaking clue why he's buying that. Oxy is pretty obvious why he's buying that. He's going to, I think, take the company private at one point. But even he's decided, you know what, I've been too patient for too long. I need to deploy. And the question is going to be, are the people that are patient, the $7 trillion on the sidelines that are patient, if they continue to be patient and don't get their entry, are they going to start chasing? And we've already seen that. But are they going to start chasing when Meta is 700? Because then we're getting into a whole different level of where this market can go. And 2025 is going to show us how that plays out. I think if you see a 30% pullback, you should probably begin buying, to be honest. I mean, look, I'm ready to start buying if we get a 10% pullback. If the S&P pulls back 10% and individual corresponding equities fall 20 to 25% because of that, because that's usually what happens, I would be a buyer of that dip. But my biggest fear is that, like, that's not what happens. Like, because again, even as I'm saying these arguments and I'm showing you guys all this data is by other people that are basically claiming we should see a pullback, which means everyone is kind of jumping on the bandwagon of like, yeah, it's time for a pullback. And that's the easiest way to not get a pullback. The best way to get a pullback is when no one's expecting it, like on August 5th. And so I just think there's a lot of questions that we have to try to resolve in this market, but 2025, the first couple of weeks to be patient and see what happens is not going to be the worst idea either. Balls deep momentum. You guys like that phrasing? 38-year-old child laughing his ass. Yeah, that is a phrase I like to use. I don't know why I like to use it, but now that I said I like to use it, there will be plenty of you guys that make jokes about that. But nonetheless, sometimes you can't go balls deep. Now on August 5th, you go balls deep. August 5th, that was the time to, but like, do we get another moment like that? That's the question. That is going to be the question. Steven says buybacks are by 2025 with fair value accounting and with banks allowed to custody Bitcoin, they will start to add Bitcoin to their balance sheet. Yeah, the Bitcoin thing, I don't know, dude. I don't know how many companies are going to actually put it on their balance sheet. Look, I'm a proponent of Microsoft putting it on the balance sheet. Why? Because if it goes to zero, it doesn't matter. Microsoft can deal with that. Robinhood putting it on the balance sheet would be stupid. Robinhood's a very small company and they only have $6 billion in cash. They need to protect that capital. But Microsoft losing $1 billion or $500 million, it would suck, but it wouldn't like be the end of Microsoft. So I do think the large tech companies should explore it as just like a simple option to diversify. But I think they're going to be stingy about it. And I don't know how easy it's going to be for them to actually put it on the balance sheet. I really don't. Now, other smaller names have done it, like the Colors of the world, the Riots, the Marathons, the MSTRs, etc. But to get big tech on board, dude, it's going to be a challenge. And I don't know how many of them are going to do it. And you know why it's going to be a challenge? It's because a lot of their shareholders don't want it. Like, as a shareholder of Robinhood, if you ask me, hey, put Bitcoin in the balance, I'm like, no, I would vote no immediately. Like, no, I don't want that volatility. We already have a ton of volatility. I don't want that extra volatility. I don't want that shit. I think if you're holding on to 20,000 shares of Microsoft that you have your life savings in because you've held it for 10 years, do you really want to deal with the volatility of Bitcoin, or do you want to just make sure that Copilot gets more adoption? Although the volatility of Bitcoin might take Microsoft substantially higher if Bitcoin does go to 200,000, you kind of might just err on the side of, well, let's just let Microsoft be Microsoft. And I think that's going to be the question that a lot of these Max 7 companies have to deal with as well. The argument for big tech is why they never bought gold. Yeah, I mean, that's a fair point as well. A lot of them have just never put anything on the balance sheet outside of treasuries that they know is absolutely risk-free, or as risk-free as you can get, or money market funds, versus taking a chance on Bitcoin. I will say the Bitcoin momentum with Michael Saylor has started to die off a little bit in terms of the excitement. And it doesn't matter how many podcasts he does. This guy is diluting the shit out of Bitcoin at MicroStrategy shareholders. And just last week, he has proposed a 10 billion share offering. MicroStrategy only has 330 million shares available in their float. So when you get someone who's ready to dilute you by that much, and he's going to get away with it, right? It's not like the shareholders are going to vote for it. He's going to vote for it. He has 46% of the controlling vote, so that's going to happen. The stock is plunging as a result of all the dilution. Now, long term, you have to believe that it doesn't matter because Bitcoin will be at 200,000 and MicroStrategy will go to $700. But that's not the reality yet. And I think that's what the broader market is trying to figure out, if that's going to be reality. But that's also why Saylor's, a little bit of the magic of what Saylor was doing back in November, December, it's fading a little bit, because now he's not getting convertible notes at 0% coupons. Now he's diluting you. And it's not, anyone can raise money by diluting. Like, that's not fun. What's fun is when someone gives you the money for free and you can go buy. Like, that's cooler to me. But that's not happening. At least not right now. And until it does happen, I think MicroStrategy stock might still be in a little bit of a tough place right now. Hood already has Bitcoin exposure right now. Anyways, yes, Hood already goes up and down on Bitcoin, so I don't think they need to put it on the balance sheet as well. Okay, let's take a listen to this clip. I thought this clip was insightful as well in terms of some of the tech pullback and why we were getting a tech pullback. So here's Gene Munster on why the market is a bit afraid of the upcoming administration and why tech is getting a little bit of sell-off, and then we'll keep going from there.
Ultimately, the market is looking for these reasons to pull back. I think we saw that a couple of weeks ago with Micron. We saw it with the Fed's numbers and the interest rates going from 4 to 2 cuts, and how that has spooked investors. And I just want to kind of frame in what this punky market has, what it's up against here is ultimately, you said it was the returns have been good, up 33%, the NASDAQ over the past year, 90% over the past 2 years. And that really sets the bar. That's what's in investors' minds. So any sort of hiccup and even any sort of change in the trading dynamic, a day like today, we don't have any news in tech. There's no reason for us to be having this pullback, but here we are. And I think that this is just evidence that investors, tech investors, are looking at the calendar and seeing one event between now and when big tech earnings come out at the end of January. That one event is the CPI number on January 15th. And so for those investors who have enjoyed this ride, you look at the next month, it's understandable that we have had this anxiousness in the market.
So with the market,
by the way, we get CPI January 15th. We get Trump inaugurated January 21st. So if CPI sucks, and when I mean sucks, I mean we go from like 2.7 to 2.8, 2.9%, getting back to 3%. And Jay Powell makes it pretty obvious to the market that he's not going to cut rates again in January. And then Trump gets elected. You got a lot of narratives flowing because one of Trump's first press conferences might be about how Jay Powell needs to lower the rates. And what if Jay Powell basically says he's not going to do that because CPI is going higher? I mean, this is the volatility that we're walking into January with, and that's something I think everyone has to at least keep on their radar.
market a little more anxious and certainly bigger uncertainties around what the Fed does next year and policy. I guess, do you have to be more scrutinizing of these valuations?
I think the simple answer is no. And I think that this is what I would describe as an uncomfortable truth, how the market is going to trade over the next couple of years, is that I think we're still in the mid part, still early to mid part of a multi-year bull run that will be powered by AI. And it's when you think about those numbers about what the NASDAQ has done, that comment almost feels out of touch with reality. But I want to frame it in that we are going to have pullbacks. We had 12 pullbacks from 95 to 2000. The internet was that. And the market is going to go sideways for certain periods. But I think if you look at in total over the next couple of years, that the substance of AI ultimately will exceed the hype. And we can drill into names. But I think that we can, okay,
I mean,
so let's
because not all valuations are equal, right? NVIDIA is trading 46 times next year earnings, while Palantir, what is it? A lot higher. I can
a lot
look
higher.
it up.
Well, I said 46.
Dude, every time someone says Palantir, my ears perk up. I was just adjusting something on the other screen. I heard Palantir. I was like, hold on, what's happening? Palantir? What'd they say? Is that something about Palantir? It's just like, it's like a natural instinct at this point.
If you look at NVIDIA on calendar 26, it's trading at 23 times. And so I think that
208 for Palantir.
208. So, you know, I think we have to again, big picture is I think that this AI is going to pull the whole market, and we do tech investing in Deepwater. And so from the perspective of, where are some of these better companies, I think you look at Micron, that's a company that we own. I mean, it's trading at about 10 times. It sounds like I'm have something wrong with my spreadsheet here. It's trading at 10 times calendar 26 earnings. And obviously it had that big pullback last week, but I think it's a symptom of investors just not understanding how important high bandwidth memory is. You look at a company like Apple, the expectations for the iPhone for the next year for fiscal 25 is for 3% growth. They're going to hit that falling down just based on what happened in 2021 with this huge 37% growth. They're going to benefit 3-4 years later from that. And so, Sarah, I think that you look at a company like Apple that can exceed expectations. You look at a company like Micron where the estimates are wiped out. I think that this is still a great opportunity for tech investors over the next couple of years.
Well, so you are breaking it down by ones that you see with lower valuations and lower expectations to where reality
Google would be
is.
another one I would mention too. And I think that's part of just our investing philosophy is to find these transformative companies, but also have an eye for valuation. But I would mention Google there too. Google's not out of the woods.
Why? Is that a quantum story? Is it an AI story?
Well, I think that Google is still on the front part of this year is still going to have a great run because I think more investors are going to understand that they've made some significant progress in Gemini. We saw it last week with some of their thinking models now exceeding what's happened with what OpenAI has shown. I mean, that is a remarkable turnaround after basically this cover-up job that Google did a year ago around multimodal models. Now they're actually showing some substance around these thinking models ahead of OpenAI. But I want to just mention one thing about Google that is important is the Google conversation, I think, again, is going to continue to move higher. I think their search numbers are going to be good over the next couple quarters. But there is still this seismic change in terms of how people are going to be using ChatGPT. This number just is surprising. They don't give a daily active user number. They give a monthly. It's about 300 million. Their daily users are only 150 million. I mean, that's a small number. You compare it to Google search is about 2.5 billion a day. And so my point is that there are companies like Google to own. I think but I think there are some questions just in terms of as more and more people see the clean results that you get with GPT and just a pure Gemini offering, I think it's going to change some behavior. So I don't think that company is necessarily out of the woods, but I think it has a good, strong trade here in calendar
There's
25.
also regulatory.
And see, here's the thing. It's not just Google with the Gemini risk or with the ChatGPT risk. It's a lot of these individual Mag 7 names that have their own individual risks that are associated with them. Tesla, it's can you get robotaxi in California and Texas to actually start working, right? Can you get some progress on Optimus? Because there probably is a little bit of premium in the stock, potentially based on Optimus. For Amazon is, can you get those operating margins to actually get above 10%? You proved it one quarter. Can you do it 2 quarters in a row? And if you can't, then what are we doing here? How many water bottles are you going to sell taking a loss from China? At what point are you going to make money on the e-commerce part of the business? For Meta, it's can they keep getting more users, right? Meta's at this point 4 billion daily active people is what they call them on one of their apps. Where's the growth coming from? And I think there's a lot of avenues where they can get that growth. WhatsApp monetization, Threads monetization, ads in general are not slowing down. We just had a holiday season, but they've got to show compounding 20% growth like they did last quarter and for the past couple quarters to get to the $2.5 trillion market cap that they're hoping to get to. Right now they're at about 1.5 and try to go up another 30-40% from here. For Apple, are people actually going to buy this damn phone? That's the risk for Apple. Are people actually going to be using Siri in a agentic way that makes them feel that they have a better connection to their phone? So there's just so many different questions with these Mag 7 names. These are inconsequential. These are questions that are not consequential in the long term, because long term these things will be resolved. But in the short term, given where valuations are, which is what I think Gene's point was, these are things that you have to look out for. And it's very hard to look out for them if you're not sure how the market's interpreting interest rates, inflation, and ultimately the Trump administration, because all of those are going to have impacts on what happens to the big 7 companies that are taking up 40% of the S&P. G says, Amit, I only upgraded to 16 because it was free with a trade-in. Yeah, I think a lot of people are like you. Now, Dan Ives thinks 250 million people are going to upgrade. Maybe. Maybe. I don't know if that happens, but if that doesn't happen, that's going to be one of the issues with Apple. If 300 million people upgrade, Apple's probably going to 300 pretty soon. But again, that is the question. on if it will happen in 2025. And the point I'm trying to get at here, every time I say that's the question for 2025, the question going into 2024 was not will Apple, Meta, Amazon, et cetera, execute? The question was, will there be a recession? That was the question of 2024. Will there be a like? It was not because Meta was at what, $200, it just rebounded from 88. Like we all knew, all right, these stocks are. Amazon was barely at 115. Like no, it was at 105. I remember because my dad bought some Amazon at that time. Like we all remember those names and those valuations were not dirt cheap, but definitely cheap. They look dirt cheap compared to today, but they were cheap. And there was no debate on valuations. The debate was, are we getting a recession or not? And if you thought we were getting a recession, that just didn't happen this year. Now, the debate in 2025 really isn't about a recession. I'm not hearing anyone say we're going to get a recession, or at least debating it, because with rates coming down, et cetera, like there's just so many ways to think that we avoid that. Private payrolls coming back up. But now everyone's worried about, is this valuation sustainable across the market? Given even if we don't have a recession, will we have the earnings growth to justify it? And I think everyone is trying to figure that out right now. And we were still cautious beginning of last year. Yeah, that's true. And people were still scared early 2024. I remember because I bought the hood options December 2023. So I technically had to be bullish that 2024 would be good, because if 2024 was not good, hood would not do good, because hood is a proxy for the broader equity markets. But even myself, I was scared. Otherwise, I would have a lot more hood than I have right now. Like I was still scared. I was like, well, what if that doesn't play out? And so now I think it's not about the fear of like, can we have a bull market? It's the fear of how much volatility will we have to deal with to get that bull market? And then, you can't factor in all the black swan events that could happen next year that could mess everything up. But 2025, we're going to have to see how all of that plays out. Amit, do you like that hood moves with Bitcoin or not? I'm neutral towards it. I'm happy when Bitcoin goes up and hood moves with Bitcoin. When it goes down, it kind of sucks. But the point is, when it goes down, it's not a MicroStrategy type of collapse. Down 20%. It's like, all right, down 3-4%, maybe 7% at the most. It's annoying. But then the market remembers hood is not a Bitcoin proxy. It is part of the Bitcoin like general universe that's out there, because they do like tens of billions of dollars of crypto trading volumes every month. But it's not contingent upon Bitcoin. So, I'm kind of neutral. If it goes up with it, I'm happy. If it doesn't, then it is what it is. But long-term thesis is not just Bitcoin. But it is a great catalyst for Robinhood, which is another reason I like the stock. Amit, do you have any thoughts on Michael Saylor comparing Satoshi to Prometheus, saying one gave us fire and the other one gave us Bitcoin? I think I heard this in an interview when he said this. Yeah, look, I respect Michael Saylor a lot, dude. I really like listening to him. Intellectually, I am very curious about how he thinks about the world. And the more you listen to him, the more, whether you agree or disagree, you have to listen, right? He makes you think. And some people may think he's describing a Ponzi. Other people think he's describing some of the greatest financial engineering of all time. But the point is, he makes you think. Do I think he's a bit over-levered? Yes. Now, granted, it doesn't matter what I think, because MicroStrategy shareholders have given him the full freedom to do whatever the hell he wants, because they have bought into his vision, which is kind of how it goes sometimes. And a lot of them have become millionaires because of it. And even billionaires, you could argue, in terms of people that really went all in. So it's worked. And although it's down from 500, it ran up to 500 really quickly, but it's up from, 30 in the beginning of the year. Now it's at 300. Nice little 10x. Like, it's worked. It's all contingent on where Bitcoin goes in the future. Any guesses on the Robinhood December 31st promotion? I have no idea. I think some people are arguing that they're going to have a Super Bowl event contracts launch, and you can start betting. Holy crap. Oh shit. Wow. I can't play this clip because they're going to ban it on YouTube, but I can at least tell you guys, wow, I just went on Twitter and I saw this. But in terms of Robinhood, I think it's going to be a Super Bowl contracts, maybe. If not, maybe another match to bring over your brokerage account into the platform into the new year, which I think would be really good for their customer acquisition strategy, but I'm not sure what that surprise will be. Look at this. Figure is going to be on 60 Minutes tonight. I did not know that. I cannot play this clip because 60 Minutes is insane with playing their content on YouTube. They will strike you down so quick. But I did not know that. So Figure, humanoid robotic company, they are going to be on 60 Minutes tonight. I wish I could share the clip, but I can't because 60 Minutes is crazy. But that's something to look out for when it's posted later on YouTube. So why is this important? A, because that means humanoid robotics are continuing to pick up steam, which is bullish for Tesla. It's also bullish for Google. Google just partnered with a humanoid robotic startup called Apptronics. So this is a theme, I think, in 2025. And ultimately, robotics is a metaphor for why I'm still bullish in 2025. There's too much damn technology and innovation that's happening. Whether it's eVTOLs with Archer, whether it's humanoid robotics, whether it's agentic workflows, not only in the enterprise, but in our normal lives soon, we're going to be able to say, hey, book me a flight, Siri, and it's going to happen. Maybe not next year, but it's coming soon. That's going to happen. That's going to be a reality. It's just hard to be bearish with all of that technology staring you in the face. And then you got Trump, who says he's pro-growth. Hopefully we get policies that are pro-growth. We're going to have to see how that plays out. But with a pro-growth macro backdrop, along with all this new tech, it does seem like there should be exciting momentum next year. Does Figure send you updates for investing? No. Figure has not sent me any updates. The last update I got from Figure was that they raised $675 million. A lot of this stuff in startups, dude, is so low-key because for them, if they give investors any updates, even if they're private investors and even if you have an NDA, all the news gets leaked. Everyone leaks something. So there's thousands of investors in Figure. If they found out XYZ had happened, they would tell some. Like it just gets leaked. So I have no updates on Figure. I do think the valuation has substantially increased from when I first invested. In 2025, if they do another raise, we're going to see what happens. I think they kind of have to raise because if they're going to start building robots, they need factories and they need a lot more money. So I think that is going to happen. But if that does happen, it just means that Tesla's Optimus is picking up speed. And that means robotics as an industry should continue to gain momentum as well. All right. I think that's pretty much it, folks. So today we talked about some of the Bitcoin weakness. We talked about my summary for 2025, or rather my summary for the Santa Claus rally going into 2025, which touched on a lot of key topics. We talked about the S&P 500 concentration to the Mag 7, which is, of course, going to be something that really matters going into next year. And tomorrow, as we get into the market open, we will see the last 2 days of the year, what happens. I'll put the summary for those that missed it in the chat, for those who want to read it. And if we can end out this year in a much more green fashion than we had on Friday when we were red. I really hope we end out at least at these levels, dude. Like if we go down 3 to 4% over the next 2 days, it's just going to be a sucky way to end out 2024, dude. I don't think anyone wants to see that happen. And that's why it was annoying on Friday when that happened. But then again, options were expiring. It's a Friday. You had to sell off, yada, yada. It would be really annoying if like Palantir goes under 70 before the end of the year. Like that wouldn't be fun. Like I think everyone just wants to end out in a good year. And I think for Palantir to go down from 78 to 70, or Robinhood to go down from 38 to 35, or from Tesla to go from 430 back to 400, you would need to see some real substantial declines over the next couple of days. And I don't know, are that many people sitting in front of the sell button willing to take profits? If they did, I feel like they either did it on 12/20 or they did it on Friday. And so I would hope that doesn't happen going into next year. My portfolio up year to date percentage-wise is 300%. I'll tell you guys the exact number January 1st, what we ended at. But right now it's up 300%. That could vary. It could go to 270. It could go above 300. But I know a lot of you guys as well are up triple digits. It's really hard. By the way, you guys want to know why I keep stressing why it's so hard to get a really big return? Take a look at this, dude. Take a look at this chart. This should give everyone who's up triple digits or even up 50% this year, which I know a lot of you guys are up much above that, a little bit of gratitude. The annualized real returns on the S&P 500 from 1900 to 2023, 6.7%. 6.7%. And from 2000 to 2023, so take off 100 years, 4.5%. Now, granted, that has outdone bonds at 2.5% and cash, which lost 1%. So equities have been the place to be. But this is what I'm saying, dude. If you're up 80%, 100%, 200%, Tess over here in the chat is up like 1,500%, and she doesn't even use options, so she's the best trader out of all of us. Like, you got to be grateful for a year like this, because on average, the S&P returns 7%, if that. So to be up 30% for the year on the S&P, and for many of you guys to be up multiple hundreds of percents, A, you want to protect that, but B, you want to be grateful that a year like that could happen. It doesn't happen all the time, and hopefully that momentum continues going into 2025. So there you go. Is that return on inflation adjusted? I believe so. I believe that's what they mean by annualized real returns. They're factoring in inflation. That's also why you see cash was down 1% from 2000 to 2023. But yeah, that's how equities performed over the past 100 years. And 2024 was an amazing year. And now we just got to see if technology can continue to compound and the macro can continue to be strong going into 2025. All right, that's it for me, folks. Thank you, everybody, for joining. I'll be back tomorrow on the Market Open, 8:45 a.m. Hopefully the microphone is a lot better. I got this brand new thingy majiggy to set up the microphone, and so we should be able to control the audio easily. And yeah, that's pretty much it. 2 more days left of this year. Then we got New Year's Eve. I might be streaming on New Year's Eve because I'm not doing anything. So if anyone wants to just chill on New Year's Eve, I clapped. Damn it, I clapped. That means we're here for another 40 minutes. But if anyone wants to do anything for New Year's Eve, I might go live at like 7 p.m. and just chill for a couple hours. I don't have any New Year's Eve plans. So yeah, that's it. And then we get into January. And we have 2025 to look forward to. Andy says, here we go again. I'm here for New Year's Eve. Well, dude, a lot of people don't have plans for New Year's. So I've never really had plans. I mean, I think a year ago I went to a New Year's Eve party, but I don't, in general, I don't like going to parties. I like having my peace, my serenity. So much damn traveling has happened over the past month. I just loved being at home for the past couple of days. And I'm very happy to just be home on New Year's Eve and not stress or go out or anything like that. Amit, did you post your video on UBS Palantir report yet? It's coming out tomorrow. Edited over the weekend. It'll be out tomorrow. And then I have a Palantir 2024 recap video that'll be out on Tuesday. So the UBS video, it's a long video. It took a lot of time to go through the entire report. That will be out tomorrow. And then 2024 recap for Palantir will be out on Thursday. So Eric's saying with the $5 super chat, Mick, can you take a look at NBIS at some point? Earnings this week recently relisted after divesting Russian assets. Okay, I'll put that on the list. That is a hell of a reason for why it got delisted. Got Russia involved there, apparently. I'll put it on the list. NBIS. We'll take a look at that one going later into this week. Tess says kids go to bed early, so then I'm on my own. I'll be there New Year's Eve. All right, there you go. There'll be a party New Year's Eve. I bought some Mike's Hard over the weekend, so we'll be drinking some Mike's Hard, and we won't break that yet. That one will be broken, the whiskey, on January 2nd. But we'll have some Mike's Hard, and we'll talk about life. And Mike's Hard, it will be enough to get me buzzed. So whatever questions you guys want to ask me while I'm buzzed, probably will be able to answer them. So there we go. There was an episode of Finance Junkies today. If you go to the Finance Junkies channel, we did an episode. It was fun. Recap of all 4 of our years, Vitaly, Chris, myself, and Carlos. And so it was fun. Oh, yeah, this is what we'll do. We'll bring people on the chat live. We haven't done that. Dude, we haven't done that since, I think April or May. I've been meaning to do this. So we'll put the StreamYard link in the chat, and people can join and talk, and that'll be fun. So we'll do that for New Year's Eve, and that'll be fun. Yes, I have to get a Shirley Temple as well. I didn't like Squid Games 2. I didn't enjoy it. And I'm not alone. I watched movie reviewers on YouTube. They hated it as well. I was not a fan. I really wanted to be a fan. I was not a fan. I wish I was a fan. I didn't like it. Okay, one last thing before we go. I have to send you guys this link. So the meetups for January officially are happening in New York City. Tentative date for the meetup in New York City is going to be MLK weekend. So I believe that's, if I'm not wrong, is that the second week of January? It's the third week. It is the third week of January. Okay, so that'll be basically the 18th, January 18th. That'll be the day, Saturday, January 18th. That'll be the day. Here is a Google form that I need to send everybody. It's very quick. You can fill it out. It's asking for your name, your phone number, because I'm going to be adding you to a Telegram group. If you're local to New York City, and if you're not, you can just say where you're coming from. And then one final question is, how did you discover me? So Twitter, YouTube, just so I have a better understanding of how you came across the content. So I'm putting that in the chat right now, and we'll see how many people are down to come. And most likely it's going to be in Bryant Park. I know it's basic, but Bryant Park is big enough for a lot of people to come in. So most likely we will be doing it in Bryant Park that Saturday, and I'll be there the whole day. I'll get there at 12 p.m. I'll give more of the details as we get into it. And I'll be there till like whatever time of night that we have to go. So this is the link. And then February, we are doing Bay Area, Palo Alto, Berkeley. I'll send more details on that. All right, there's the link. Links in the chat. But February, we're doing Bay Area. Now, there's one thing that could mess up this this New York City meetup. And I can't say what it is, but there's one thing that could happen that weekend. And if it does, I will know a couple days in advance and I will cancel the meetup. It will be well worth canceling the meetup if what might happen actually does happen. And you guys will find out why in the future. But if that thing doesn't happen, then New York City, January 18th, that's what you want to keep an eye on for the meetup. It'll be fun. We get to meet, get to see everybody, be in person. I'll have a gift for everyone. You guys will get to hopefully enjoy that gift, and you can use it every single day, which will be good. It's not a grinder day. Goodness gracious, bro. Holy crap. You guys find a way to incorporate into everything. It's like a skill set, how you guys find a way to get this damn joke there every time. It's not a grinder date. It's something else. But, yeah, January 18th, New York City. Should be really fun. And then February, we're doing Bay Area. We're doing California. So I'm really looking forward to that. California will be fun. I've been to the Bay Area many, many times. Now it'll be fun to like meet a lot of people there. And then the other cities that are on the list for this year are Miami, Dallas, Toronto is up there. We got a lot of Canada people. Chicago is up there. I know people have mentioned that. I'm going to try to do a poll and figure out what the next best cities are. LA for sure. Maybe we don't do it in February. We'll do LA later in the year. And then the UK for my Europe people, or UK is not in Europe anymore, right? Brexit is, I don't know. I don't know, pounds, euros, whatever it is. But we're definitely going to be doing that region of the world, hopefully in July. So we'll be going international as well. And I really want to go to London because London is like New York in terms of the center of finance. Like a lot of finance happens through London, and same thing in New York City. So I think London would be really fun to check out as well. Oh, it's in Europe, not in the EU. Okay, that makes more sense. It's in Europe, not in the EU. All right, that's it. First half or second half of February, it will likely be Valentine's Day weekend for February because that's when the debate tournament is. That's where I'm going to Berkeley to coach a couple kids there. So but I'll come there earlier. So think about it as February 10th to February 15th. Think about those 5 days in February if you're local to the area. One of those days or two of those days, we're going to have the meetup. And that's likely what it's going to be like. It's like a campaign trail. Well, dude, I mean, I've been saying this as a content creator. This is, I think if you're developing a real audience, you got to go meet them. You got to go see these people. You got to connect with them. I really want to because I love meeting you guys in person. I've seen you guys a bunch of times at different events, and it's just cool, right? Like if people actually listen to you on a daily basis, they connect with you, they keep up with your life. You want to know who they are, and you want to show your gratitude and appreciation for them. So I think it'll be really fun, really cool. It gives me an excuse to travel as well. If I commit to this every single month, then I get to travel somewhere every month and just get some new experiences. So I think it'll be fun. It'll be really cool, and hopefully everyone gets to enjoy as well. All right, that's it. Tomorrow morning, 8:45 a.m., we'll be back for the market open. 2 days left to see if this Santa Claus rally happens. It's time to see what the market thinks and if it wants to go up or down as we get into 2025. All right, bye, everyone. Thank you, everybody. Appreciate you guys. I'll see you guys tomorrow on the market open. Bye, everyone.